Hi, welcome to the market alert for Friday, the 1st of February 2019. So yesterday in the pound, we were fairly sideways. There is a bit of a down trend going on here. The market's making, apart from Wednesday there, sorry, not Wednesday, yesterday, Thursday, higher than the previous day, but otherwise the trend there is towards the downside. And at the moment, prices are still above the 200 bar moving average, but we'll have to see what Brexit news comes out, moving these markets one way or the other. So we head through February. The 29th of March is the deadline, if it is adhered to, of course. So yesterday, fairly quiet. We had a sell signal at the R1 level. The market traded down to the 200 bar moving average, bounced back off. Where did it bounce back off to? Well, if we go from here, oops, wrong one. If we go from here down to here, you'll see the market stop at 76%. The market then came back through the 200 bar moving average but found support at the DP level, and then the market bounced back up to do a double top there at the R1 before prices came back down and started flirting with the 200 bar moving average again. At the moment the market's below this, but stuck in a sideways range there. Needs to break through the 200 bar and DP to show any convincing move to the upside there, and that is all dependent upon news, of course, and we have nothing from the UK today. We've got the non-farm employment one today for the US. More on that in just a moment, how that's going to affect the Dow. So there are one or two bits and pieces, but the main event is going to be the non-farm payroll figures, and we'll see how they come out. What do they actually forecast as? Actually, let's just have a look. Wow, they've halved the numbers more or less. Previous was 312. They're forecasting 165,000 new jobs. We'll just have to wait and see. And the daily chart we've already looked at. So let's move on to the Dow, because that's the one that's going to impact today. And if we have a look here, you can see yesterday the market managing to get back above the 200 bar moving average. It's sitting above this just at the moment, and if it's sitting above it, then it's going to more or less trade above it and then head back to the all-time highs, which we have over here. You can see this here, and in fact it'd be worth marking this up, because as I've said before, they're going to have an assault on this. There's no doubts about that going forwards at all. If I can get rid of all of this stuff, there we go. So yeah, we've got this high, and then here. And what I would be inclined to do here as well is get the fib retracement from the recent low to the recent high. We're at the 76% retracement there, as well as the 200 bar moving average. We're currently above this, 24,996. We're 25,000, I think 34 there. And also I'd be inclined to do the same here, which is just going to be an interesting one. There you go. Watch this one today, 25,154. And then finally the all-time high down to this level here as well. And this one will be very important. And if the figures are better than forecast, like another 300,000, then we will head to this level. They'll just ignore it if it's bad, because they want this market back on the highs. And in Bitcoin land, nothing to report here, just the same old sideways, and even narrower this week than it has been for the last few weeks. So nothing to report here at all. Okay, so that's a quick roundup of events. Let's see how things pan out with the non-farm payroll figures at lunchtime. Otherwise, if there is anything else to report, I will let you know. But as ever, thanks for watching. See you in the next one.